What's up, everybody? It's Investing Sensei here to bring you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 a week. So these videos are definitely fun to record because you guys give me the companies you guys want me to go over, but we do pull up the company's profile, read a little bit about them, we look over the performance on the charts, and then we pull up the calculator, crunch the numbers, show you guys how to get these values, and then we wrap up the video with going over the dividend yield history, showing us when the best opportunity is to get into the company or was. But in this episode, guys, we will be going over the next one on the list. It is SUI. So this is the list that you guys have provided to me. So if there's a company you don't see on the list, let me know. I'll be happy to add it to the list. Or if it's a company I have not covered in the past, definitely would appreciate if you guys do subscribe with that notification. We're trying to get to 20,000 subscribers by the end of the year. So definitely help me out as well. Drop a big thumbs up on the video. But let's go ahead and get started, guys. So if we pull up Seeking Alpha, you'll see that it's SUI, stands for Sun Communities Inc. Currently trading about $148.57. If we actually pull up the company profile, we can read a little bit about them. So Sun Communities Inc. is a REIT that as of March 31st, 2022, owned, operated, or had an interest in a portfolio of 603 developed MH, RV, and marina properties comprising nearly 159,300 developed sites and over 45,700 wet slips and dry storage spaces in 39 states, Canada, Puerto Rico, and the UK. You'll see here in the sector, they are in the real estate industry, is residential REITs. Employees about 5,455 employees. They were founded in 1975, and then if you just want to look at their site, it is suncommunities.com. If you guys want to check them out, if I show you guys here, you guys can see if we look at the year to date, they are actually up 6.18%, which is pretty nice, especially looking at how every other stock in the market is just actually down overall. If we look at the 1 year, guys, they are down 24.06%. If we look at the 5 year, they're up 70.40%. So some pretty nice growth here. If we look at the 10 year here, 245.11% in capital appreciation, guys. This does not include the dividends that they pay out. If we look at the total amount since they've IPO'd, this was, I believe, goes all the way to about 1994 or so. You'll see that a return of 638.42%. Pretty awesome here, especially because a lot of the other companies that I have gone over in the past, they've actually been down, and you would have been down in capital appreciation, but in dividends you would have collected some pretty juicy ones, but it wouldn't have made up for the amount that you invested. If we look at the 52-week range here, you'll see that they are trading about in the center of the 52-week low, which is $117.63. If we look at the high, it's $200.23, and you'll see that they're trading right around the center around FFO 7.28, and then dividend rate is $3.52, dividend yield 2.45%, and then market cap is a 18.16 billion market cap for this REIT. If I actually show you guys here the dividend scorecard, again, they are in the real estate sector, so it's a REIT. If we look at the dividend summary, again, it's 2.45%. Annual payout is that they do pay out $3.52 for each share that you do own in them. Payout ratio 169.27%. 5-year CAGR is 5.60%. And dividend growth is showing 6 years, but again, Seeking Alpha has been known to have this incorrectly sometimes on the value. They do pay out quarterly as their frequency, and they pay out 88 cents. So every 3 months, you would be getting 88 cents per share that you do own, and that is pretty awesome there. Let's go ahead and actually pull up the calculator and we can crunch some numbers, guys. Alright guys, so we have the calculator pulled up. Let's go ahead and do the first one, which is, let's see how much of this company would you, or how much money would you have to have invested to make $1,000 a month investing in this company. So first thing we're going to do is we want to make $1,000 a month. There's 12 months in a year, so you're gonna multiply that. So annually we need to make $12,000 in dividends. Basically, you're actually gonna take the 12,000 divided by the annual payout, because that's how much they pay out per share. So this would give you, which I accidentally messed up, didn't click the divide, but you divide the 12,000 by the $3.52. This will give you the total number of shares that you need to own. So you'd have to own 3,409 shares to basically get about $12,000 a year. Then you can multiply this number of shares times the share price, and this would give you the total number or total amount that you need to have invested currently. This does not include drips or reinvestment of the dividend. You would actually require a lot less, but you would require more time. That is something I need to work on, because that was a requested feature from a subscriber. I think it's actually a pretty great idea, is to see how much, because you know, if you were investing for 5, 10, 15, 20 years, you would actually require a lot less capital initially. But $506,000 here. Again, a quick way that you can actually calculate this is you could take the $12,000 that you need to make for the year divided by the dividend yield here, and this is a quick way to calculate that. You'll get a rough estimate, so about 489,000, which is roughly close to it. And then let's go ahead and do the last one. Well, I guess not the last one, but the middle one, which is $100 a month. And honestly, you could actually take the previous answer and divide it by 10, but just for the video, we will crunch the numbers. So 100 times 12, because there is 12 months in a year, so we need to make about $1,200 a year. Divide that by the annual payout, which is $3.52. You need to have about 340 shares, about 341 shares. You can actually multiply this times the share price, and this would give you the total amount that you need to have invested in this company, and you would be roughly making about $100 every single month. So about $50,000, almost $51,000. And again, quick way that you can calculate this is take the total amount that you need to make a year divided by the dividend yield, and you'll get about 48,000, almost 49,000. That's a quick way to calculate that. Let's go ahead and do the last one, which is how much would you have to have invested in this company to make $100 every single week? I think that would be a pretty awesome goal to achieve just in general for some of the great companies you know, that you would own. Imagine getting $100 every single week to spend, or you know, reinvest, or do something that you actually like and it's completely passive, but you want to make $100 a week. Remember, there are 52 weeks in a year, so you multiply that. So for the full year, we would have to make $5,200 to make roughly about $100 every week. You're going to divide this by the annual payout, so we can find out the total number of shares you need to own, which is about 1,477 shares. To kind of roughly achieve that, you can multiply that total times the current share price, and this would give you the total amount you'd have to have invested, which is roughly about $219,000, almost $220,000. A quick way again to calculate this is you could take the 5,200 divided by the dividend yield, and you would see roughly about $212,000. So that is the calculations, guys. Let me know in the comment section if you are invested in this company. I am currently not invested in this company, but looks pretty interesting. Definitely would want to look at more research and look at the balance sheet and everything. But let's go ahead and wrap up this video by looking at the dividend yield, guys. So you'll see that this is the 5-year chart. This right here is the dividend yield. You'll see over time it's fluctuating. So the higher the number, typically the better the entry point for the dividend yield. So you'll see back in 2018, they were a dividend yield right around 3%. And it's been slowly going down, and that's probably because the price of the stock has gone up some. And then you'll see in 2020 it's been around 2%, and it's slowly been actually increasing lately. So might be you know, honestly 2018 would have been the best opportunity to get in. But again, this is actually all I have for you guys. Let me know in the comment section if you are invested in this, and if you haven't subscribed, consider subscribing with that notification as well. Drop a big thumbs up on the video, definitely would appreciate it. I will talk to you guys later. Take care, stay safe out there. Bye guys.